So, good morning, everyone. Welcome to the show. Hi, stream. Hi, Steve. Hi, everyone. Good start. Good start. And a new week. Good luck trading.
Always a good week. But let's keep every day the same, right, Henry? That's what I like to do. People like to differentiate Mondays and Fridays for middle of the week. I keep every day the same. New York open. I'm ready to go.
Okay, Steve, what can we expect today and the upcoming days ahead?
Well, first, how was your weekend, Henry? Everything was good on your end?
It's way too hot. I'm
Way too
currently
hot, yeah.
I'm currently in Europe, and we have like over 40 around 40 degrees, so it's like over 100 Fahrenheit. It's way too hot.
Yeah, it's cooking. Yeah, that's hotter than seems like some of the matches in the World Cup.
It's actually funny at the World Cup because usually they never had a water break, so it's basically
Hydration. Hydration break, Henry.
It's selling every second of it, huh?
Yeah. Well, you know the West, we always like to sell something. We're the biggest salesman in the world, so
Yeah, it's true,
that's how it is. But yeah, interesting. Lots to talk over the weekend. It seemed like the whole, of course, negotiation is still on between Iran and the U.S., and they're seeing further meetings in Switzerland coming up. So yeah, many speakers going in there. But then again, the show goes on, as they say. Nothing confirmed. Still going to be bumps in the road in the market, even though market's already forward looking. It made its move and now consolidating. But yeah, that's what we have, you guys. Everyone's just waiting for the confirmation. We've had over 30, but the show goes on. Nothing yet in writing.
What do you think about UK PM Starmer?
No surprise.
Stepping back. I think.
No surprise.
I think like everyone has been waiting for it, and everyone was wondering how is he able to stay in power for so long. But
Yeah.
I think the pressure got too big. So
yeah, like I say, too much pressure. Too much pressure. Save the markets. On the upside, downside is too much pressure. Eventually, the market makers will release their hands and start hedging. Seems like the UK start hedging right now, looking for other bets, other parties to please the people, please the cabinet. We know the political system is a little different in the UK, but very similar in Canada. But anyways, we don't have to we never get into politics. We're neutral. We look into markets only. But yeah, it's just very interesting. Yeah, it stepped up.
Yeah, I think it's still interesting to know what's going on in other countries, because by the end of the day, everything is correlated, right?
Of course, yeah.
And okay, so let's go. Do we have any news today?
Yeah, we have FOMC member Waller speaking. That's all I ever have right now. You guys highlighted nothing else. No surprise, since it's also a Monday. But yeah, he should be delivering some sort of remarks on the conference and on the international role of the U.S. dollar. Yes, still is the international currency of the world. So the petrodollar, still many countries using it. So it's still up there being talked about. So yeah, markets will probably be locked in onto every word he's talking about, speaking.
Wait, but stay there. Can you do me a favor? Can you go back, and then on the right, there's the filter option. Can you select Canada, CAD?
Yeah, Canada had some news. I didn't
they had, and I think I just want to talk about it. So in my opinion, what I have, my personal observation over the years has been that many times Canada and the US, they are dragging each other along, right? Because they are close neighbors and they have a really similar economic situation overall. So one usually follows the other. And I think the interesting thing here is that the CPI forecast has already been significantly higher than the print before. And now it came actually in much harder than expected, right?
Mm-hmm.
And so I think this is what we have been talking about last week, that given all the growth and given the strong labor market in the US and all those things, that the traders now might start looking at those kind of things, right? CPIs, and so like co-inflation. And so just something, I mean, it will not have an immediate impact, but I think it's always interesting to know and to see how things slowly boil up. If they go up, right? And if they boil up. So just something to be aware of, that it might be something to look upon over the next couple of months if it continues to rise.
Yeah, of course. And yeah, Canada, US always be big trade partners, even though there have been, a lot of negative news lately about the whole deal going on between Canada, US, and also Mexico. But you guys would be surprised how much natural resources the US pulls from Canada and needs from Canada as well in the underlying. So, like I'm from Canada, I see it all. I work for, or I've known of a lot of people in the natural gas industry, oil and gas, where we ship majority of ours down there to get refined. So, we use each other for a lot of our resources. So that's never going to go away.
Yeah, and I think there's also a major topic that is still on the horizon, right? Even though the Strait of Hormuz is supposedly to be open or is about to be open or to get open, whatever.
Yeah.
But the matter of fact is that the whole storage capacities around the globe are super dried up. And there's actually also a little known fact that the storage facilities themselves, they also need a specific margin of storage to be inside for them not to implode and not to go basically to break. So you cannot just empty those up to 0%. So you need to leave like 10, 15, 20% in those storage facilities. So they're completely, so you cannot completely like run them dry.
Yeah.
And so therefore this whole negotiation topic of the Strait of Hormuz, Iran and America, is so important going forward because it has such tremendous implications. And yeah, so just something to be aware of, guys. Okay.
Yeah, and like just quickly as a side note or a bit of a joke, I was speaking with this longtime investor, options trader. He's a low, medium to long term positions, and he was saying someone needs to set up a web camera on the Strait of Hormuz, see what the heck is actually going on, because of course we're just seeing the print. We need to see like a live stream, a live visual, Henry, of what if is it open or is it closed? Just as a joke, so we can all see what's going on.
I can really imagine that if you install those kind of public cameras, that you will get it shut down really fast.
Yeah. If we have a YouTube stream, if we have a YouTube live stream going on with Strait Hormuz, it's finished. Yeah.
It will not stay around for really long. All right. Actually, guys, I'm super sorry. As a matter of fact, let's quickly.
We are both sorry.
Talk about the risk disclosure. So everything you're gonna see or about to see in the stream is for pure educational and entertainment purposes. Please do not take anything for granted what Steve and I and our any of our future guests will talk about. It's just our pure personal opinions, and we are also tell you, please do your own back testing, only trade your own strategies, never listen to anything what we are talking about. We hope that you understand that it's a pure matter of analyst talk, basically without any kind of recommendations. And trading is a super risky business. Be aware of this. And yeah, do your own thinking, prepare. And this is what we hope to help you with, that you're getting prepared, a prepared start into the new week. Yeah. So.
Yeah, and like quickly, Henry, just before you start, I want to just say, with Fed Wallace speaking right now, and also the ECB, I believe. Yeah, the ECB.
Yeah, Lagarde, right?
Lagarde is speaking as well. So far, we're getting small bullish momentum, not much, but since, I'll talk about this later, since the gap down from the weekend, we are up about 250 points since. So far, we have bullish momentum after all these speakers, ECB, Fed Waller. So just kind of keep an eye on right now. But just before you start, I just want to mention.
Yeah, no, and this, I think by the end of the day, let us get a quick overview of what's going on the big picture side of things. But I actually think, we haven't talked about it last week, right? So even though the Fed has been more hawkish than expected, but nevertheless, the people are currently focusing, or the traders are currently focusing more on the peace negotiations, right? That the Strait of Hormuz is open, that our rate cut is postponed, but the hope is still there that it will come back, right?
Yeah, like 2 years, yeah. But for this year, it seems like no rate cuts.
No chance. Like the whole Middle East situation needs to be stabilized. And maybe one final thing on this topic is, as long the whole Lebanon issue is not resolved and they don't have a long-lasting peace, it like the Strait of Hormuz is not out of sight, right? And we're talking here about negotiations over the next 60 days, so it's not a done deal yet. So just saying. But yeah, the interest is more relaxed, and we will also see it in the charts. Let's have a look. Big picture, daily. I mean, it's bullish, right? We had this small correction, dive below, gap closed last week. And in my opinion, upside momentum.
Yeah, and right on point too. Once the gap closed, it reversed right away. So that's why I always bring it up, because it's
a
it
gap.
just seems
It's all about the gaps.
It seems such an easy concept, but there's the support.
Yeah, I mean, it's always easier to talk about it than being in the moment and execute upon, right?
Yeah.
So yeah, ES. So I would say NQ looks more bullish than ES, but it's still a bullish upside momentum. Dow similar. Russell actually looks very bullish because we have like higher low, higher low, higher low, higher low. So it's a Dow theory upside bullish momentum. Gold, I mean, we talked about a couple of times, so last weeks, nothing really going on here. Actually, we hit last week, 1.5 weeks ago, we had hit our support area here. Oh yeah, so it's still there. So we hit a support area. We're watching for 4410. This is our current resistance level that we need to break in order for a technical push to be able to move higher, to break through. Silver, similar. Actually, I mean, silver looks really strong, right? Because we opened right to the support area and basically have been rallying for the whole day. So currently it's a upward momentum, strong upward momentum there. 71.15 is the level we are watching for our sustainable upside move there on silver. Oil, we had our rebounds retest last week, couldn't go continue the trend, but we're not able to break through. So I would say the goal is still around 67 plus minus, right? This is our support area for time being. Maybe even the gap here. Maybe even this gap. Next big target is another. Yeah, actually, that's a good level. Look, we have like resistance support area here that comes together with the gap. Then we have the big gap at 58 plus minus 58.00.
So is it retesting that 78 level right now? Oil.
Wait 1 second.
Sorry, Henry.
Sorry, no worries. I was just like, again, please. What?
Is it retesting the 78 level right now, or is it already selling? No, it's already selling off. Oh, okay, interesting.
Yeah, it's already selling off. Yeah, so it's basically it opened higher and is now selling off. So like
this. Small retest. Yeah.
So basically, we opened up there, right in the resistance area, selling off the whole day, and basically the opposite of silver, right? Silver opened into the support area and is being bought up.
And so often I've seen this too with commodities, gold and silver, where the big rise comes up into summer months cool down, and then later in like August, September, we could see strong volatility come in, upside, downside. We don't know, of course, we can't be always all bullish, all in, but just interesting how commodities work.
So yeah, I think currently commodities overall are currently super interesting to trade intraday. Just be aware that the volatility is quite high, right? And we have basically news might come in from every point, like inflation-related news, Iran, US negotiations related news. I mean, VIX continues to implode, right? We had our target at 16. Let's zoom out a little bit. Weekly chart. Ooh, that looks super bearish. Wow, that's I mean, look, the chart goes back up to 2004, 2005.
Wow.
It's insane. It's really insane.
Yeah. No
There
support.
used to be like for a long period of time, it was actually a really good strategy also to go long VIX, but in the last couple of years, it's the best strategy to have is go short VIX. Let's say triple Qs. Okay, sorry. I mean the triple Qs look even more bullish than Nasdaq futures themselves. So yeah, I mean, if it breaks above the previous all-time highs, then it has plenty of potential to go higher. The question is, I don't see a clear technical pattern there to have a proper measured move. So I think last monthly, yeah. I think last week or 2 weeks ago when we talked about it, looked a little bit different, like more of a triangle kind of thing, but currently I don't see. Yeah, we had like this triangle and then we had the measured move, but it's not really pretty. Like this overextension here, this one, it went a little bit too deep in my opinion and destroyed the overall picture a bit. But yeah, nevertheless, if it plays out like this, it's like a bullish triangle and technical analysis, and then we have a projected upside move on our 25-30%, right? It's what we have been talking about last week or 2 weeks ago. So just something to watch. I mean, it's again, right? We don't know for sure, and this is we just try to show people on the stream and who will rewatch it later. Just that you need to have a flexible mindset. This is all about it. We're trying to teach you is basically to be aware of levels and don't be attached to one particular side, but having always multiple scenarios. So, for example, you see here we have this resistance. Actually, let me show it on. Everyone is trading Nasdaq, so let me show this on Nasdaq.
But again, what do you mean by that? Everyone trading Nasdaq? You mean in the prop game, right, Henry?
Yeah, in the prop game for sure. Yeah, I mean, come on, we're here for the prop. We're here for the prop game.
The prop from stream, yeah.
So yeah, but nevertheless, so let's say, for example, always maybe we should call the stream like two sides or both sides or something like this, so people understand better the concept what we're trying to bring along. Mm-hmm. Basically to be unbiased in terms what the market is doing, because
always unbiased, always.
Yeah, but I mean it's hard, right? Because it's all about like everyone loves to do market predictions and it goes there, that goes there. It's all about the ego and prove one's point. But if you want to become a long-term, consistent, profitable trader, you really need, first of all, understand risk management, proper risk sizing, and backtest your strategy, have your own system in place. And first of all, also always follow your setups, right? So for example, I love to trade both ways. So I love to trade with trend, but I also love to trade failed breakthroughs. What does it mean? So let's say we have this all-time high here. Is it the all-time high? No, sorry.
It's a lower high, yeah.
It's a lower high. Let's say if this lower high, that's our current intermediate resistance area, and let's say the market goes above, but cannot really break through, struggles and breaks below, right? And so, for example, I also love to trade this kind of pattern on the short side. But I have been trading it for many years, back in the many years ago when I've been trading full time. So I have my strategies in place, but I also love to trade if it goes above on the long side. And this is what I think is a really valuable lesson for the people to understand, that they need to have the flexibility and seeing the both sides. So always being in a kind of a position, in a state where you understand that can really go up tremendously with like a lot of momentum and short squeeze behind, but at the same time it also goes on the way down, right? Because then many people are trapped on the long side. So as you can imagine, many people only trade the long side because they're getting kind of accustomed to it, that this market is always only going up, and they're basically buying every dip, like here and here and here, and it works till it doesn't. For example, here. So I can tell you one thing, like, but this little gap here, this little candle here, it's there for a reason, and the reason is that many people are getting screwed on the big picture, but also on the intraday level, because there are stops, and at one point, if the volume to the downside is big enough, everyone tries to liquidate their long positions, and then it just collapses, right? And then here, this is the big money. This V-shaped reversals, this is always the big money coming in, the big money stepping in.
Yeah, but they're not entering blindly either, Henry. They wait and they see orders on the back end. They see the large hedge pressure from the options market, from the futures, from the dark pool, and they're like, okay, if my other friends are getting in from the other institutions, other hedge funds, and they see the data, well, I don't know whether they're messaging each other but they see the clear-cut data because they use the most powerful instruments and tools online available to use. They get in as well. Right, Henry? They're not just blindly putting in billion-dollar orders if it hits that area. No, they're waiting for the reaction, and that's the whole point of you guys. Wait for the reaction. Of course, you're not going to get the best price or as good a price as these institutions or hedge funds, but statistically, it's better to wait for that confirmation than just blindly enter.
Yeah, I mean, I heard it many times, right? Some people, they're always finding ways to reasons to complain, like, yeah, you cannot outcompete the big guys. They have so much money. They can buy themselves this $10,000, $50,000 tools per month, where they see like dark pool activities, and they get all real-time data from market makers and stuff like that. But it's a different game, and people need to understand, because if you buy 5,000 full contracts or 10,000 full contracts, you don't have a stop of 40 points. Your stop is 500 points. Your stop is 400 points. Many times you even don't have a stop, because you have a portfolio you're sitting upon. It's like 10 billion, it's like 20 billion, 50 billion, and it's just a small position for you, right? Because you're still risking maybe just a 50 basis, basically 0.5%, or maybe 0 to 2%, and so the market goes against you, but the overall situation is still bullish. They're buying more, right? Because of nothing fundamentally have changed. They're just buying more. They're averaging down, but they can do that because they have the risk management in place. They have the pockets in place. They have it's a completely different game, and they in comparison to us prop traders or even intraday traders, day traders don't have time pressure. So they don't need to be out of the market by the end of the day. They're sticking in like for weeks and weeks to come, right? And they sit it out.
And they don't have the ego to post online their big P&L.
Yeah, I mean, that's a good thing. They're not allowed to, right? I mean, I think I can tell you many of them have a big ego, but the good thing is they're not allowed to.
Yeah.
So otherwise people would think that those numbers are real, but it's a different game. All right, so that's my personal opinion from how I have seen those things over the last couple of years. Because look, and then, so in my opinion, this is the big market move. Getting liquidity, getting all the way back, and now same, right? If this is our big level, then this one could not go below. This one could not go below. So this is like the fair price, so to say, because the market was not able to go much deeper. So this is like where the main interest is. But some player obviously had Wednesday. What kind of news were on Wednesday? Because many times they're using low liquidity events, like big news events, new upcoming, in order
I remember
push.
that. Yeah, like I remember that day, Henry. Now, especially, I was like, you know what? There was like some Lebanon news pre-market, and then once New York opened, it just flushed. But we didn't really have any major news that day. It was like, some Lebanon news.
Okay.
Like a few minutes before New York opened, just flushed, and then we just got bought back up, and then there wasn't anything major actually that day.
I mean, because that's the game. People need to understand. It's also a game, right? By the end of the day, it's all auction. So let's say we have here 250, 300 points, right? And if you use all kind of tools and you know your market, you know the playfield you're in, and you know the market is thin. It's like, I don't know, on each side, buy, sell, sitting like 5 contracts, 10, 5, 15, like low two digit, single digits, because it's pre-market, some news came out, people are waiting for other news to come. And so the market is thin. Then it doesn't take much pressure to get a sell-off.
Yeah.
You basically just hit a couple of big orders, then the algorithm starts to pick in, because momentum, right? So all the momentum algos are kicking in, then you can sell some more, and then you basically just reverse, and then the game continues on the other side. And then the gap is closed, so other algorithms are kicking in, because now it's a gap close game for them, right? So it's at one point, you know how those things work. But again, we don't need to anticipate how far it will go, because it can easily go to here, right? I mean, why not? Another 200 points pre-market.
Yeah, and like the other indices, they went further, right? Like there was one where Dow Jones still hasn't closed, but ES and Russell went much further on the gap close. So they're not equally as precise as NASDAQ. And we're only looking at one picture here.
So yeah, I mean, I have already shown it a couple of times, right? But there's a reason why it's called grabbing the falling knife, right? Or try to catch the falling knife. So you basically try to predict how far the drop will go. But yeah, this time it stopped at around plus minus. Okay, we overextended the gap a little bit, but many times it just keeps on going, and then you basically have minus, minus, minus. So my personal opinion is, let the low play out, wait for confirmation, consolidation, and then on a smaller time frame, you have another confirmation that the market wants to go up. And this is your game. And so just to showcase this scenario, let's go on a 5-minute chart.
And just Henry, just letting you know, 1 minute we have New York open.
Yeah, okay.
Just letting you know.
All right, but nevertheless, then let's focus here. What do we have? New York open. What time is it here? So this is in US high. So this
we took out the high there.
This can act as it's also overnight high. So we basically accepted this. So you could say this is a proper support area. And then we had this pattern here, bullish pattern. Let's say this is our measured move, 800, 300 points, 710. So it basically the measured move goes right into the previous all-time high, so to say. Let's make the same, triple Qs, pre-market, grinding higher. So yeah, it's bullish, guys. At least for the current time, right? But now is the question: when does it, at least for my personal opinion, when does it stop to be bullish for me personally? For me personally, I want this level. Let's say it's 3750, 780. So I want this level to hold, right?
So that's your bias line then.
That's basically my my line in descent, right?
Line in descent, yeah.
So to say, it's basically my line in descent. So I want this area to hold. If it holds, it's bullish. I mean, it can dip below, right? So again, it's not we're not talking mathematics here, or like where it needs to be on, like, that you calculate it on the comma basis, but it needs to be. It's always a range, right? It's always a range, and yeah, but as expected, market is rallying. So yeah, next target is obviously this intermediate lower high here. Let's say 30, 90, 75. 30, 90, 75. So that's a possible target, and then we have the all-time high, obviously, 3,100. Yeah, sorry guys, it's always a bit messy to 3,100. 31,100. Sorry, so like this. So those are the targets I'm watching, right? So if I'm long, I want to have around this lower high here, like from the big picture, from the lower high. I want to have some follow through, some strong momentum. If we don't get there, then I'm cautious, because in my opinion, if we stay between those two levels, then the chance is high that it might be a range day, or that we might retest the downside. So if the market, let's say, is to something like this, dips below, but then comes back, then I'm looking for long side. But if it breaks down, stays below, is not able to go up, then it might be a short scenario for me. It's really nothing too complicated, but you need to see, like, you need to get a feeling for where the market is going. And now I give it to you, Steve, because oh, actually, look, SpaceX. We also talked about it last week, right? So that we need to watch closely SpaceX, because it might give us an indication of how the overall technological sector is going. And that's the reason why actually, maybe some of you have been wondering why I have on my side panel all these stocks. It's basically the Mac 10, so to say.
Oh, 10.
Yeah,
I was gonna say, I only have Meg 8, but you have Meg 10.
yeah, no, I extend them a little bit, right? So it's the biggest ones, and I always like try to get a feeling for its percentages, right? So for example, look, Google minus 3.4. So it tells me, like, without knowing the news, it tells me, all right, there's something going on, right? So if I have the SpaceX -5, and the other ones also, Netflix -1, Broadcom -1.7, so I know, all right, there's something wrong on the horizon. And now look, Super Microcomputer has been sitting at around plus 10%, now slowly goes down. So if Nvidia turns negative and all the others are also getting weaker, that might give me an indication that overall NASDAQ might be weak today. And now I came back, do my analysis here. I have my line in the sand, right?
Yeah,
So
we're hitting the level now. Yeah.
If the market breaks, consolidates, and then I see all of those is getting like redder and redder, more red, so to say, then I know, all right, that might be an indication. But in the same time, if it turns green and we are coming from red to green, then especially in stocks and NQ, many times this like is a signal that we might have reversal, right, to the upside. So it work. So just trying to give you some more strategies, guys, that you can implement to that might help you along with like getting better on the direction of the overall market, so you don't trust blindly either the chart or the news, because that's it all works together, right? All right, Steve, I give it to you.
Yeah, perfect. Yeah, thanks, Henry. Let's get into it. We have New York open right now, but still, I'm in the pre-market mode, pre-market mindset still, because I still wait for stronger indication. I want more market structure after New York is open. So that's why I always say I'm still in the pre-market mode, even like 30, 45 minutes after New York open, just watching the key levels, watching how we react from those key levels. And what do we have here today? I have 30,578 mapped out. This was a small gap from the weekend. We had some news. Yeah, we had like a flurry of news, Henry. It was like Iran saying, the Strait of Hormuz is now closed. They want some more payment for the polls. Trump saying, we can negotiate. Switzerland coming in. Let's see what we can put on the table. So yeah, not a huge reaction, not a huge gap, but we had a small gap. And what happened pre-market?
Maybe just a quick side note on this whole Hormuz thing. So it's basically like Iran is saying, yeah, we're getting 300 billions from the US for the rebuild and all the damages. Trump is saying, no, you will get no money from us.
No money.
And no, but now is the kicker. Yeah, they will not get the money from the US. They will get the money from Qatar, from Saudi Arabia. So basically, from all the allies from the US.
Yeah.
So it's basically like, all right, guys, sorry, but you have to pay.
You guys have to pay. We're busy with the World Cup right now, so they're all booked up right now, Henry.
Yeah, so no, I thought it's super funny, right? Because it's like, officially, no, US will pay nothing, but it's our allies have to pay, right?
Yeah,
no,
that's funny.
Just some side notes.
So what happened pre-market? We sold off after the gap, and seems like the market has been in a rush to close it. Still a thin volume, but the algorithm turned on, closed it overnight into the London session, and now we have been rising. And this is I wouldn't call this my, like Henry said, line in the sand or bias level of the day, whether long or short, because we're over 250 points above this line right now. So what is this? This is going to be my extreme weakness line, so like extreme sell side line. If we break below it, I can always look for opportunities depending if there's any sell side pressure. But what this will be, I'll mark this out as my impulse level of the day. What happened just before pre-market? We had ECB Lagarde speaking. We had little momentum, as well as Fed speaker Waller. I don't know exactly what his comments were, but the whole point here is to see the reaction of the market. And what did we get? We saw around 50-point push. Is this strong enough to create the line in the sand for me? Not so much. So what do I do when I'm not 100% confirmed on my bias line? I zoom out and let's see where this lines up on. So yes, as Henry said, we already took out Thursday's high. Boom, that's done. What's next? And where does this line up, Henry? Perfectly on Tuesday's New York Open. And this happens day by day. It's not rocket science, my friends. This is how the market moves. It's pretty straightforward. Like it's not rocket science.
No, but this is actually the
right here.
This is actually also the most interesting thing why, and that's also the reason why we came up with this format to show you that it doesn't matter which style you trade. So there is no right or wrong. You just need to pick one style that you want. So for example, like I work a lot, as you can see, and you will see with time, I work mainly with supply and demand, right? Extremes, levels, correlations. It's nothing fancy. It doesn't have like fancy names. It doesn't have fancy complications. And it's basically, once you understood it, you're like, oh, great. It's really simple. So this is just a small part. And Steve thing, it's the same. He always watches out for US closes, for US Open, for some extremes during the US session, and he waits, right? So it's all about waiting, sitting on the hands, and letting the market showcase you where it wants to go. And so there's no really a right or wrong. It's basically you need to commit yourself to one style, and then understand every aspect of the style, all its in and outs, and this is how you can get better, and this is how you can improve, because then you don't have 100 setups. You maybe only have 5 or 6 or 7 that you will redo over and over again. Then you get familiarize yourself with those concepts, and you can get better slowly, day by day. You understand the concepts better, your setups better, because you do them every day in and out. And that's the reason why we're saying don't never copy blindly everyone and do your own thinking, because there's no right or wrong. There's like the only wrong there, in my opinion, is copying all kind of random setups and don't apply them to your own methodology, to your own trading style.
Yeah, and knowledge is free, whether it's setting up levels, looking at order flow, timing sales, or just purely the charts itself, and maybe you're just trading off the gaps. It's all for free. Stick to 1 or 2 setups. If you have the experience, sure, you can add on a few more setups once you're live into a trade to protect yourself, protect your account. Again, we're prop traders, we're intraday, we're not holding for longer than 24 hours, my friends. So let's get into it. And when I'm looking at these levels, especially
Steve, you meant 24 minutes, right?
24 minutes.
24 minutes.
Or sorry, 23 hours. Sorry,
23 hours.
Yeah, because futures market. Yeah, but then again, yeah, like we're intraday, my friends, so we're not holding for a long period of time. So that's why we don't, go too deep into the macro, but it's still important to look at the bigger picture and the news and what's moving markets. So yeah, so far today it seems like level 30,811 will be my line in the sand. Because not only did we have some Fed speakers, and it's funny how market slowly grinds up right into where some important events are lining up pre-market. And when this is happening and we get a small reaction, I'm like, okay, let's zoom out and see if this actually makes sense. And where do we line up? We line up. You could say either at Tuesday's, close to Tuesday's high, you can mark out the daily levels, or what I always found to be useful is the New York Open, the largest volume node of the day, lined up perfectly, and that's what we're sticking with today. Okay, so we have this level, and I'm doing this live with you guys. I never prep these levels pre-market. I like to speak about it, so I'm more focused. We're doing this live. I mark it up, and then I know how I'm heading into my trading day and what I'm looking out for. So yeah, we have this lined up. So now let's do the intraday measured move to the upside. So now we see our downside risk. We see our 50% area, whether we're taking longs or shorts. And now let's mark it up to the upside. Where is our upside risk? And that will be, yes, I'll be taking out, like Henry mentioned, Tuesday's high. Is it all-time highs? No, it's not. It's just a lower high from the all-time high, which is actually very close. But we will mark this out right now. And where does this mark? And you cannot make this up, my friend. This is look at this. This is the New York Open from Wednesday, lining up almost perfectly from the measured move. Let's mark it out. Look at this. You cannot make this up, my friend. It's level to level. I swear. I swear.
I think we need to recall the channel level to level.
It's not magic, my friends.
No
like
magic.
it's
level to level, no magic. Guys, if you like, what do you
level.
like more? Level to level, no magic? Then comment down below. Let us know.
Yeah. Like I learned the term the measured move from Henry. That was all Henry right there. But like I did no prep on this because I want to do this live. There's no script. I want to see, let's see.
Steve, don't lie. You paid a lot of money for the market to go direct.
thousands of dollars. Yeah. But yeah, this is just a simple concept, level to level. Just know your upside risk and now your downside. NASDAQ is selling off right now currently, but is this enough confirmation? Of course not. It's only been live 13 minutes. Sure, yes, we have a lot of volume kicking in where, we first had an initial push. Now we're seeing a sell-off. So in this area right here, you're seeing a lot of volume, but still, yeah, no important candle closures, no important any sort of confirmations. Because then again, yes, what we're looking at, we're only looking at NASDAQ. We're not looking at any other indices. That's what I like to see as well as another confirmation. Who is the strongest? Who is the weakest? Pre-market, I had NASDAQ 100 as the leader. So yeah, if it's the leader for me and I'm looking for, let's say, any short opportunities, then I'm staying away from NASDAQ and only looking at Dow Jones and ES since it's at the bottom of the list. But before we do that, because I updated that list, it was about 10-15 minutes ago. It was prior to New York Open. So let's just pull it up right now. This is the ratio. So I look at the ratio zoomed out. I look at the ratio zoomed in as well, just as an extra confirmation to see what's really going on. And look at this. Look at our good friend Russell 2000. Huge spread. To me, this is the real imbalance. This is the real imbalance. This is the real spread. As you can see, NASDAQ is still holding up against ES, still stronger than ES, still a bit stronger than Dow Jones. But when you look across the board at our last friend here, the Russell 2000, the small cap stocks, we pulled right through. So yeah, we sold off. What does this mean? This is the ratio of NQ over Russell. So this means that Russell 2000 is much, much stronger. And yeah, as you can see on the right, yeah, it's up over 0.8%, close to a full 1%. So that's no surprise there. I like the, you can look at the percentage points, you can look at the ratios. For me, I like to look at the charts. So when I pull up the ratios, it makes a lot more sense to see where we're looking at. So yeah, if I was looking for any long ideas, it would only be on Russell 2000 if that trend continues. So yeah, these are our levels right now on NQ. Now it's because Russell has pulled ahead and is in first place, Henry. Let's look at Russell 2000 quickly. Just give me a second. Let's clean this up. Always like to just keep the charts clean. We have the levels now on NQ. Now let's look at Russell 2000 and see how the picture looks. So yeah, look at this strong. Strong push right off open. These were my levels from previous day. Of course, we had Friday was day off, no trading there. Henry, be honest, any trading on Friday, or you stayed away completely? Since we
no, I had Purdia related work. So
yeah. But were you surprised? Because you see the stats. Like, do you still see a lot of prop traders trading these off days? Because since futures is still open,
it really depends. It really depends.
Yeah.
I mean, there's I think I didn't measure it, but I think there's even a correlation weather related, right? So if it's a good day, then probably less people are trading. If it's like a rainy, cold day, then people stay inside and
they trade more.
They fool around more. So.
They fool around.
I didn't test it. So I didn't have verified data on this.
Yeah, just interesting. Because I always stayed away. There have been times in the past. I'm not going to lie about it. I've traded on these days off, thinking, a few hours of opportunity. But then I look at the time in sales, look at the volume, nothing, no big orders, no nothing.
But to be honest, many times those day off, especially like US bank holidays, many times those are actual training days.
Yeah.
Because like some technical traders on the prop desk, they are forced to work in them, and they're just like keeping them like slowly push up the price, right? And there's nobody to fight them, and so you just stay with the trend. And many days actually there are like either huge reversal days, one like to either one direction or the other, or it just like slowly goes one way direction.
Yeah. That's why so often we see, I would say sometimes even more 50% of the time, you see these big moves happening pre-market. So like Henry said, there's no one there to stop them. The market makers, they're offline. There's no pressure. And the insiders, once they're getting in, they're gapping up the market. Yeah, there's no one on the other side to balance the books there. So yeah, that's why a lot of times you see larger moves and people are like, I should have traded the Asian session. I should have traded the London session. It was the bigger move. But in my opinion, those are much harder to trade if you're a New York trader, because there's no one on the other side,
I mean, I think the complicated part for most of the US traders is if they start to trade the Asian session, that then they're not used to it. So if you only trade the Asian session, you can make it work for you because then you get used to its own dynamics, right? Like many ranges, rage bones, you can play like mini reversal strategies a lot, those kind of things, then you can make it work, but it's a different game. And I think the hardest part is always for the people coming from the volatile US session and then try to make it work in the Asia session and getting smacked, right?
Yeah, completely different setup. Like we're not saying you can't make money. There's plenty of traders that do make money during that time, but they back tested it.
Yeah,
they know that's a different session. You can't be comparing it to New York. There's no chance because it's much different how the market moves. So, anyways, to each their own. And what we're seeing right now on Russell had a gap down as well, closed it much faster. So what I'm doing is I'm marking out my impulse level of the day. This was at around 2,989. Let's just call it 29,990.
Actually, just a quick side note. We did not mention it, but Russell is actually took out his all-time high and is now at new all-time high territory.
New all-time high, yeah. So that probably would have been the measured move, was all-time high. We already took it out. So the squeeze is on a Russell. We should have a bell. Anytime there's an all-time high, Henry, we should have a bell that goes on. Ding, ding, ding.
Yeah, I can get one. Like.
Yeah.
The question is for which market? For all of them? So it's like
for all of them, yeah.
can make some jingles.
Yeah, for SpaceX, yeah. But we're seeing strong sell-off on SpaceX right now, down right around 8%. So
it's actually so funny. I have a guy I know. It's not a friend. It's a guy I know, and actually two guys. And they were both like, "Oh yeah, I'm gonna buy SpaceX. It's a long-term investment. What do I think?" I was like, "I made no idea. I'm not my game.
No financial advice.
I have no opinion. Yeah, I don't have an opinion."
Yeah.
All right. So nevertheless, bought it. SpaceX rallied like $50 or what since the point, and I'm like, "Yeah, I'm gonna keep it for forever, right?" I'm like, "Mate, you told me you went from investing it over 10 years to you will sell it after it rallies for another 20 to 30%, to now keeping it again for like another 10 years. So now the market goes down. He's like, oh yeah, it's good that it goes down. I'm going to buy more. I'm like, just like, what's the strategy, right? And this is what I'm also trying, guys. What I'm trying, the point I'm trying to bring along.
Yeah.
Pick a strategy, stick to it. That this is how you will make money, like being profitable in the long term by choosing one strategy. But like this friend is an example of jumping from one, not friend, sorry, acquaintance, from jumping from one strategy to another and not sticking to one, right?
Yeah. Classic human emotion, a classic trap. You guys ever interested? I talk about these traps, these impulse controls. Newsletter is free. I do it weekly right now. I'll probably be writing, a little more often in the future. But for now, this is what I talk about: human emotion and psychology, how to get away from the trap. Because we cannot control the actual impulses. It's just human nature. They're always going to be there, but it's all about the recovery. But then again, we could always get into that later. Something I talk about, and just quickly want to look up the measured move on Russell 2000. So I'm just marking up the gap open to also the New York Open. Just interesting. So we had a New York Open right around Monday, which made a lot of sense. So what happened here? First lined up as resistance on Tuesday, sold off. Lower high, and look what happened today. Blew through it. I wouldn't be surprised if there were a lot of stops above this area, a lot of liquidity. But yeah, the highs got broken. And like Henry mentioned now, all-time high got broken as well. So this was right around the measured move. I'm just going to mark it up. So this is the risk to the upside. Let's just say 30,030 on Russell 2000. If anyone's interested in those levels, they are right here. So yeah. So for me, if the trend continues on Russell, we are nearing close to 30 minutes after open. If the trend continues, I see strong volume, strong pushes, long only. If for some reason Russell sells off and the other three indices are consolidating and hold their momentum, because I always see the asset rotation flip midday if I see no setup. Just that's why I have the live ranking. It's no concrete matter for the day, because we're intraday, we're live. Volume can always switch up quite fast. These brokers, these institutions always get the information first and we get it last. So that's why I always have the charts and price levels visual, because at least I can see the momentum. And like what they say is the market never lies, the charts never lie. And just because there's no headline doesn't mean there's nothing underneath something that's going on. So that's why I always have my ratios, my all four indices in front of me, just to see who is really pushing, who is creating a strong narrative. And so far, Russell 2000, small caps, which have always been more aggressive, are pushing the narrative right now. So yeah, these are my levels. Let's just go back to NQ. But yeah, ES was the weakest. Currently pushing right now. Nothing too fancy. Closes gap as well. I wouldn't be surprised. Dow Jones. Yeah, Dow Jones closes gap. Didn't have much of a gap on the downside. But I just want to zoom out and see and look at this. Did it close? No, it never closed. Dow Jones still has not closed its major gap from a few weeks ago, which is interesting. And I will definitely line that up on the level there. So that's could be an indication for us to see more sell side in the coming days or weeks, because if one or two or three are closing the gap, but the fourth is still missing, which you could say is a bit of a divergence in price action, then we will eventually see a sell-off to close that gap later on. I'm not saying it's going to happen today or tomorrow, but in the coming weeks, the probability is definitely there. So this is the visual, my friends, on NASDAQ right now. It's still fighting the range, no clear direction. If you zoom in on the 5 minute and look at these candles. This is why I do not trade the first 15 to 30 minutes, because a lot of uncertain volume and price action. You could say this price action reminds me of, how do you call it, like a funnel where you have all this volume or all this built up pressure just wanting to escape. And then once it explodes, it doesn't know where it's going to go. It's going to go either direction, north, south, east, east, west. So that's what reminds me of the first 15, 30 minutes price action during New York Open, which is why I stay away from it. I'm not saying you cannot make money, but for me, that's always helped with my.
But maybe one thing of observation for people to consider. If we have a range like this and it's sitting at the top of the move, right? So what we are seeing right there, then more times than not, this is either the top and then we get a reversal, or it's a super strong continuation pattern, because basically how you need to imagine this, and especially with such a big range of like 150 points around the open,
Yeah.
and the market is basically just chopping around there. So you can imagine that a lot of volume is changing hands there, right? So big players are either accumulating or distributing their size. So once the market breaks out from those kind of things, it's usually a strong signal that it goes its way, either to one direction or to the other. Just something for you to consider for along the way, guys.
Mhm. Yeah. Any questions, you guys? Let us know. Like,
Yeah.
subscribe. Henry and I will be doing this,
More
continuously,
often.
more often. We'll be
Yeah.
gathering, a lot of the community members in pretty soon. But yeah, just any questions, you guys. Either you can ask us live, or you can ask us in the comments afterwards later on as well. We will always be around. We're always trading.
Otherwise, also follow Steve, follow Purdia. You can even follow myself. The links are in the description down below. So if you have any questions, feel free to ask. If you have also any Purdia related questions, I'm also happy to help as far as I can. Otherwise, I know people who know people who know people who most likely be able to help you.
Always.
And not just jokes aside, yeah, if you have any questions, let us know either in the comments down below or hit me up on the socials. Follow us, subscribe, so you get notified once we go online, because now, as you know, summer is coming. So a vacation time here and there, some on my side at least, also some business trips here and there. So stay tuned, subscribe, turn on the notifications for Podium. And yeah, I wish you all good trading. Trade safely, don't over leverage. Always size down, always our recommendation. I think I'm not sure how many times per stream we are saying it, but it's you always play it safe. This is how you get it's more important to survive than and focus on the downside, on the risk side of things, than the other way around.
Oh yeah, it's all about survival mode. Try and always picture yourself in your seat trading next day, next week. Or yeah, even further, picture yourself still trading that same account next week. So don't be making some silly silly ideas currently right now. Always picture yourself next week. I want to still be trading this account, still be trading this account. Set up your edge per trade, set up your levels, your risk management per day. Do the math. It's a very simple math. You don't have to be a rocket scientist, but it still has to be a little math that has to be done when you're measuring your account risk, your total drawdown, and what your expected rate of return is.
Yeah, I think that's the biggest struggle that people have, right? That the traders have today, is with all the social media around and all the P&Ls and fake P&Ls and whatsoever. And like, we always try to educate the people with Podium and try to tell them like, hey, slow down, risk down, reduce size, trade less, right? Stay longer in the game. Therefore, we also have the life path. But unfortunately, for most of the people, as far as we can see it in the industry itself, luckily at Purdia we're focusing on the more on the serious traders. But from what I'm seeing is that many traders are handling the prop accounts as an extended demo sim account, right?
Yeah.
It's basically if you pay just a couple of bucks, then you don't feel the pain in comparison if you would like destroy a $20,000 to $50,000 real account, right? And I think this is where people get it wrong, and many also establish bad habits in terms of proper trading behaviors. So yeah, I'm curious to see how it will play out, our little range breakout from NQ.
Yeah, so for NQ, RTY the strongest, keeping its momentum right above that line, the 30,811. And yeah, we'll see if we can hold this level and continue further. But so far, the probability that direction is there, because from what I'm seeing on ES, as well as Dow Jones is pushing. So that's why I like to see is like all four indices pushing the same direction.
But it's not pretty. It's
No.
like in those days they're really not pretty if it looks like this. And many times actually those days are also getting into some kind of weird extended range days, right? Where the market just like extends, reverses, extends, reverses. So people are getting chopped up on both sides. So yeah, therefore, guys, do your own thinking, do back testing on different strategies, have your risk plan ready, and yeah, always do your own thing. All right, everyone. I and we wish you happy trading, safe trading, and we see you around tomorrow at 9 a.m. Eastern Time.
Yeah, perfect. Thanks, Henry. See everyone tomorrow.
Thanks, Steve. Thanks, everyone.